What's up everyone, Eric here again. Today is the 25th of January 2021. This is my closing alert for CRM or Salesforce.com. It's been a slow couple of weeks here. It's been almost 2 weeks since I posted the video. In general, that was fine because I was basically waiting for time decay to kick in on all of these positions and then I eventually get paid. What put me in a waiting game this time was a lot of my positions, or nearly all of them, were moving sideways or had moved slightly against me. And in general, that's fine as long as it's a small move against me, or if it's just staying flat. It's literally amount of time as an option seller before you get paid. And that's exactly what happened here. You can see my trade history here. I sold a short put in CRM way back on December 23rd of 2020. And again, what kept me in this was that the price action moved against me a little bit. I sold the 200 put here and price action pushed down. It kind of hovered right around 220 is where I opened it. It slowly trickled down maybe to the 215 range, I think. And then finally here in the last week, it pushed back up and it finished right around 223, 222. And that's exactly where I opened it. I love selling puts because it's so easy to show you the power of selling an option versus buying the stock and or buying an option. I'll talk more about that when we look at the chart here in a second. But back to where I started, I sold the 200 put here for the February 19th expiration. I initially collected 288 right here. These numbers are different for both of these actually. This price is what I bid at, but I actually got filled at better prices on both of these. I bid 286 and I actually got paid 288, which is great, a couple extra bucks. So anyways, I initially sold this for 288. I hit 50% of my max profit probably about a week ago. But if you've seen some of my past videos, I'm holding on to these puts a little bit longer right now because they're kind of a hedge against some of my other positions where I'm waiting for some calls to come down in the price where I want the puts to go up in price. Anyways, I would normally close this out much closer to 50%. This one was at like 71% of my max profit, and that equaled just a little over $2 in profit, or $200 profit per contract. All right, I think that covers the timeline here. Let's take a look at the chart real quick. Here is CRM's chart. You can see this vertical line here. I opened on the 23rd of December 2020. When I opened it, the underlying stock price was around $229. And then, like I said before, it slowly trickled down against me all the way down here to about 213 it technically got to, 212 even. And I think it was right around here that I was really close to my 50% max profit. Maybe I was at like 35 or 40% here. And then 4 trading days ago, this popped up here. And I think that's when it pushed over the 50% profit mark. However, like I said before, I decided to hold on to this for a little bit longer, kind of a hedge against some other positions that I have. And sure enough, the price slowly trickled up here. So then also right around here, I put in an order to close right around my 70% of max profit. I decided at that point, even though it's a hedge against some of my other positions, you know, if I hit 70% of my max profit, I'm just going to take it, especially because I've been in this for about a month or a little over a month. And that's kind of a long time for a naked put. There's a lot of naked puts that I sell that I'm only in for, 5, 7, 10 days. So the fact that I'm in this for technically almost 33 days, that's a long time for a naked put. So I decided if I hit 70% or more, I was just going to sell it and take my profits. And that's what happened. And then also another couple notes here. I didn't mind sitting on it longer because A, this had just been a big sell-off here, right? So eventually I figured once it hits the 200 moving average, which is this red line, there'd probably be at least some resistance there, if not some pushback. And sure enough, that's what happened. And then on top of that, the MACD had recently crossed positive here from the negative territory of the 0 line. And so that was showing positive momentum. And then also the RSI down here, again, bottomed out here at oversold. And then it was showing slowly but surely some positive momentum as well. So both of those were going up. It seemed like we kind of hit a bottom here. So I was just kind of sitting on it and hoping for a little pop up in my favor. And that's what happened. Oh, and then one final thing. By placing this 70% order here, I got filled at the very top of this candle when the day started trading. And the only reason that happened was because like 3 days ago, I had placed a GTC order, or good till canceled order, closing at that 70% of my max profit, right? And so then I could just set it and forget it and walk away. And that's exactly what happened. I was literally surprised this morning when I saw the little email or the notification that this closed for a profit, because yesterday I was sitting, I think, right at 60%. And so this jumped 10% of my max profit in one day. And if you're trying to do this on a manual basis, you're never going to get that lucky spike in price action. The only way you get those is if you place the orders ahead of time and then hope you get lucky, right? I didn't know this was going to happen, but I figured, shoot, I'll just do it for the heck of it. And if it gets filled, I get lucky and I get a few extra bucks. And that's exactly what happened. And it just streamlines this whole process, right? I'm trying to make this whole system as easy as possible. So by placing these orders ahead of time, I just set it and I forget it, and eventually it gets filled. It's that simple. All right, let's cover the usual rundown here. The duration of trade was 33 days, which was pretty long, like I said, for a naked put like this. My percent of max profit, I held on a little bit longer, up to 71.5%. My return on capital was 10.3%, which is pretty good. 10 to 12% is pretty average, and this is right at that average. And then last but not least, my profit per contract was $206. Like I mentioned before, starting off this video, I feel like selling a naked put is probably the easiest and most straightforward way to show you how selling options is far superior than buying options or buying stock. Because look at this, I got 10.3% return on my capital, right? Well, had you bought 100 shares of CRM here, at the same time that I opened the trade, it was $229. And then let's say you got filled at the same spot that I did at $230, which was the high point of this day, you would have only made $1 per share. So if you had 100 shares, that's $100, right? So you would have made $100 divided by $22,900, right? Because 100 shares here at $229 would be $22,900. So that gets you a return on capital of just 0.4%, where by trading strictly the option, the capital required and then my profit on that capital was more than 10% in the same amount of time. To me, it's a no-brainer. This is exactly why selling options is awesome and selling puts is awesome. I love selling puts. It's by far my favorite strategy. And frankly, I'm probably going to step it up just because, I don't know, it's just easy. It's easy to manage, easy to track, easy to explain. And frankly, as long as you enter at a decent time, it's just an easy way to make money. I mean, the long-term bias of legitimate stocks is in an upward trend, right? It's pretty rare that legit stocks all of a sudden sell off permanently, right? It does happen, but it's kind of the exception to the rule, Obviously anything happens, but again, the whole stock market in general has a long-term positive bias. And the same thing can be said about solid stocks, right? Like Apple or Microsoft or Toyota or whatever, I mean, CRM, they've been around for a while. Salesforce, they're probably not going anywhere. They're a little bit newer, but you never know. These tech companies seem like they can pop on a bubble at any time. But anyways, you get the point. In general, there's a long-term positive bias in stock prices and the stock market prices. So even if I was totally wrong and this breached my 200 put down here, I could just roll it out and it would probably push back up above that 200 put, and then I eventually would roll that out and make money off of that, right? Because by that point, it's like this high was 283, and if that sold off all the way below 200, there would be tons of people at that point saying, oh my goodness, this is such a great deal. It used to be 283, and now it's all the way down to like 190, like that's almost a third cheaper than what I could have bought it at, just a couple of months ago. And again, Salesforce is a big company. They're not going anywhere anytime soon. As far as I know, all the fundamentals of the company are good and they're still intact. This has just been kind of a temporary sell-off here because there's this huge gap up here. I don't know why. I guess it was probably the earnings here. So there's this huge euphoria over positive earnings, I guess, and then it slowly sold off here, right? And this is kind of back to normal. I mean, it literally came back to where it started at the earnings. Anyways, all that to say, had you bought the stock here, you would have been down money this whole time. And then even today, if you were still holding stock, you would be below where I opened at 229. Right now it's at 225. Even if you just bought one share, you'd be down $4. But since I sold the put and then just let time decay suck out all the value in that put, it's at the same price or technically below. And I made $206 in that same time, where someone that owns the stock, at best case scenario, is break even. Obviously, you got to time your positions, right? You couldn't have sold this put way up here at 283. That'd have been stupid. Sorry if I'm so blunt, but yeah, you would never sell a put right after it just skyrocketed in price, because if anything, you would sell a naked call way up here at like $300 because you're like, okay, it just had this huge move up. It's not going to keep going, right? Normally it doesn't. And so if you'd sold like a 300 call, same thing. You probably would have gotten paid pretty fast because this sold off pretty quickly. But anyways, you get the point. There's this huge move up. You would definitely not want to sell a put right here, because then that surely would come down and put pressure on your put, and you'd be rolling out and tying up a bunch of capital. So anyways, you just get in at the proper time, which I did. You know, this was a big sell-off here. I got in right here, which turned out that wasn't the bottom, but it was close enough, right? That's the beauty of this too, is that you just have to be close enough when you're selling options and selling a put in this scenario. It's like I was close enough to the bottom that this went against me, stayed above it, and eventually time paid me. It's that simple. All right, I'm dropping my mic and I'm getting out of here. I think I've talked this one to death like usual. Let me know if you have any questions. Trade often, trade small, and I will catch you in the next video.